Section 1. Introduction. Credit score catastrophes. They're real and they're coming for your couch. Friends, Americans, countrymen, lend me your ears and your credit reports. Because tonight we delve into the dark, often hilarious underbelly of credit scores. These magical numbers, often shrouded in mystery, hold the power to make or break your financial dreams. Ignore them at your peril. Think of your credit score as a financial report card. It's a numerical judgment of your fiscal responsibility, whispered among lenders, landlords, and even insurance companies. A good score can unlock a world of opportunities, from snagging a sweet mortgage rate to scoring that dream car. But a bad score? Well, that's a one-way ticket to Rejectionville. Imagine this. You're about to buy your dream house. You can practically smell the fresh paint, envision movie nights in your spacious living room. But wait, your credit score throws a wrench in the works. Suddenly, your dream home morphs into a dilapidated dumpster fire, all thanks to that little number lurking in the shadows of your financial history. So buckle up, dear viewers. Tonight, we're diving headfirst into the world of credit score catastrophes. We'll debunk myths, share real-life horror stories, and expose the shocking statistics that reveal the true impact of a neglected credit score. And trust me, it's going to be a wild ride. Section 2, Mythbusters. My credit score's fine, I pay my rent on time. Oh honey, no. Let's kick things off by shattering some common credit score myths. Because let's be honest, misinformation is as rampant as a raccoon infestation in a suburban attic. First up, the classic, I pay my rent like clockwork, my credit score must be stellar. Hold your horses, my friend. While paying rent on time is fantastic, it doesn't automatically translate to a glowing credit report. Many landlords don't report rent payments to credit bureaus, so unless you're renting from a unicorn landlord who does, your on-time payments are basically invisible to the credit score gods. Next up, the age-old adage, checking your own credit score hurts your score. This is about as true as saying pigeons can predict the stock market. Checking your own score is considered a soft inquiry, which has zero impact on your credit score. It's like peeking in the mirror, you're assessing, not altering. Finally, the granddaddy of them all, closing a credit card improves my score. Nope, not necessarily. Closing a credit card can actually ding your score, especially if it's an older card with a solid history. It's like throwing away a vintage wine because you think it's past its prime. You're losing valuable credit history, which can negatively impact your score. So, before you go on a credit card closing spree, do your research. Section 3. Real-life horror stories from dream home to dilapidated dumpster fire. Thanks, credit score. Now let's spice things up with some real-life credit score horror stories, because nothing screams pay attention to your credit score like a healthy dose of financial schadenfreude. Take John, a bright-eyed, bushy-tailed millennial who decided to buy his first home. He found the perfect place, a charming cottage with a white picket fence. He could practically hear the wedding bells and smell the aroma of freshly baked cookies. John was pre-approved for a mortgage, so he thought he was home free. Little did he know, a lurking credit score monster was about to crash his party. Turns out, John had a forgotten credit card from his college days. He hadn't used it in years, but it had a small, unpaid balance. That tiny debt, combined with his limited credit history, tanked his credit score. The mortgage pre-approval vanished like a puff of smoke, leaving John with a broken heart and a shattered dream. Then there's Sarah, an entrepreneur with a brilliant business idea. She needed a loan to get her startup off the ground. Sarah was confident, prepared, and ready to conquer the world. But her credit score had other plans. Years ago, Sarah had co-signed a loan for a friend who, let's just say, wasn't the most financially responsible individual. The friend defaulted on the loan, dragging Sarah's credit score into the abyss. No loan, no business, no world domination. Just a harsh lesson in the importance of credit score awareness. These are just two examples of the countless ways a neglected credit score can wreak havoc on your life. So heed their warnings, dear viewers. Check your credit reports, address any errors, and build a healthy credit history. Because the credit score monster is always lurking, waiting to pounce on unsuspecting victims. Section 4. Statistics don't lie. When numbers paint a grim picture of financial misery, alright folks, time to get serious. Let's talk numbers. Because when it comes to credit scores, statistics don't lie. They paint a grim picture of the financial hardship that can arise from a poor credit history. According to a recent study, over 20% of Americans have a credit score below 600. That's a whole lot of folks facing uphill battles in the financial world. These individuals are more likely to be denied loans, face higher interest rates, and struggle to secure even basic necessities like housing and transportation. Here's another sobering statistic. Individuals with poor credit scores pay an average of $200,000 more in interest over their lifetime compared to those with good credit. That's enough money to buy a small island, a fleet of luxury cars, or a lifetime supply of avocado toast, depending on your priorities. These statistics are a stark reminder that credit scores are not just abstract numbers, they have real-world consequences. They can impact your ability to achieve your dreams, secure financial stability, and even afford basic necessities. So let's ditch the ignorance and embrace credit score awareness. It's time to take control of your financial future. Section 5. Love gone wrong. Your ex can haunt your credit score, even after they're gone. Ah, love, it's a beautiful thing until it's not. And sometimes the ghosts of relationships past can haunt you in the most unexpected ways, like your credit score. Yes, you heard that right. Your ex can wreak havoc on your financial life even after they've exited stage left. Imagine this. You and your significant other decided to open a joint credit card. You were madly in love, building a life together, and sharing a credit card seemed like a testament to your commitment. Fast forward a few months or years if you're lucky, and the relationship goes kaput. You split, divide the furniture, and vow to never speak again. But wait, that shared credit card is still lurking in the shadows, like a vengeful ex-lover. If your ex racks up debt on that card and doesn't pay it, guess whose credit score takes a hit? Yours, my friend. And it doesn't matter if you were the responsible one, always paying your share on time. As long as your name is on that card, you're both equally liable for the debt. The same goes for any joint loans you might have taken out together. Mortgages, car loans, personal loans, you name it. If your ex defaults on their payments, your credit score will suffer the consequences. So before you jump headfirst into the world of shared finances, remember this cautionary tale. Love may be fleeting, but the impact of a bad credit score can last a lifetime. Moving on to Section 6, the rental nightmare. Sorry, your credit score says no to this lovely apartment. Moving on to the housing market, where your credit score can make or break your dreams of finding the perfect abode. Landlords are increasingly relying on credit scores to screen potential tenants, and a less than stellar score can turn your apartment hunt into a nightmare. Imagine this, you found the perfect apartment. It's spacious, sunny, and in a fantastic location. You can practically picture yourself hosting dinner parties and soaking up the urban vibes. You submit your application feeling confident and hopeful. Then, the dreaded email arrives. We regret to inform you that your application has been denied. The reason? Your credit score. Landlords use credit scores to assess your financial responsibility. They want to know if you're likely to pay your rent on time and take care of their property. A low credit score suggests a higher risk of late payments or even eviction, making you a less desirable tenant. So, before you embark on your apartment hunt, check your credit score and address any issues. Because in today's competitive rental market, a good credit score is your golden ticket to securing your dream apartment. Otherwise, you might find yourself stuck in a dingy basement suite, surrounded by questionable neighbors and a persistent stench of mildew. Section 7, Loan Rejection. Blues. We'd love to give you money, but your credit score just said nope. Let's talk about loans, those magical money givers that can help you achieve your dreams. Whether you're buying a car, starting a business, or consolidating debt, a loan can be your financial knight in shining armor. But there's a catch. Your credit score holds the key to unlocking those loan vaults. Imagine this. You found the perfect car, a sleek and stylish chariot that will make your commute a joyride. You head to the dealership, ready to sign on the dotted line. But wait, the loan officer delivers some bad news. Your credit score is too low to qualify for a loan. Dreams of cruising in your new car evaporate faster than a puddle in the desert sun. Lenders use credit scores to assess your credit worthiness, aka your ability to repay borrowed money. A high score indicates you're a responsible borrower, likely to make payments on time. A low score, on the other hand, paints a picture of financial instability and missed payments, making lenders hesitant to part with their precious funds. So, if you're planning on taking out a loan anytime soon, make sure your credit score is in tip-top shape. Because a good credit score is your passport to loan approval, favorable interest rates, and a brighter financial future. Neglect your credit score, and you might find yourself singing the loan rejection blues, stuck in a financial rut with no escape in sight. Section 8, the insurance hike surprise. Wait, why is my insurance premium suddenly sky high? Now, let's venture into the world of insurance, where your credit score can play a surprisingly significant role. You might be thinking, wait, what does my credit score have to do with car insurance or homeowners insurance? Well, dear viewers, it's more intertwined than you might imagine. Imagine this. You've been a loyal customer of your insurance company for years. You pay your premiums on time and haven't filed any claims. Suddenly you receive your renewal notice and nearly faint at the sight of your sky-high premium. You call your insurance agent demanding an explanation. Their response? Your credit score has dropped, leading to a higher premium. Insurance companies use credit-based insurance scores to assess your risk of filing a claim. They argue that individuals with lower credit scores are statistically more likely to file claims, leading to higher costs for the insurance company. While the correlation between credit scores and insurance claims is a subject of debate, the reality is that your credit score can impact your insurance premiums. So if you're looking to keep your insurance premiums in check, maintaining a healthy credit score is crucial. It's just one more reason to pay attention to your financial health and ensure your credit score is working in your favor, not against you. Section 9. Credit Score Redemption. It's not too late to turn this financial ship around. Alright folks, we've explored the depths of credit score catastrophes. But don't despair, it's not too late to turn this financial ship around. Redemption is within reach, even if your credit score resembles a post-apocalyptic wasteland. First things first, check your credit reports. You're entitled to a free copy from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, every year. Request your reports, scrutinize them for errors, and dispute any inaccuracies you find. It's like a financial scavenger hunt, except the prize is a healthier credit score. Next, focus on building positive credit habits. Pay your bills on time every time. Keep your credit card balances low and avoid opening too many new accounts in a short period. It's like training a financial puppy. Consistency and positive reinforcement are key. Finally, consider seeking professional help. There are credit counseling agencies that can provide guidance and support on your journey to credit score redemption. They're like financial therapists, helping you navigate the complex world of credit and build a brighter financial future. Remember, a healthy credit score is an ongoing journey, not a destination. So, stay vigilant, stay informed, and keep your credit score shining bright. Section 10. Conclusion. Check your credit score now, before it checks out on you. And so, dear viewers, we've reached the end of our credit score odyssey. We've debunked myths, shared horror stories, and exposed the shocking statistics that reveal the true impact of a neglected credit score. But most importantly, we've learned that credit score redemption is possible. Don't let your credit score become a financial bogeyman, lurking in the shadows and sabotaging your dreams. Take control of your financial health. Check your credit reports regularly, and build positive credit habits. Remember, your credit score is a powerful tool, and like any tool, it can be used for good or for evil. The choice is yours. So go forth, dear viewers, and check your credit scores. Do it now, before it checks out on you. And remember, knowledge is power, especially when it comes to your financial well-being. Now, if you'll excuse me, I have a date with a credit report and a bottle of antacids.